Welcome to Billionaire. This is RP here, recording video on 1st of October 2022. So we are going to do Nifty's analysis for next week. We'll also check the levels for next day as well. And we'll do this with the help of first price action and indicators. Then we'll check Elliott Wave, and then we'll check option chain. So let's first check what we discussed in last week. So in last week, we discussed on a price action perspective as well that Nifty would open somewhere near 17,100 because that was something obvious. World markets were in a deep red on last Friday, right? And on Monday we opened a gap down, then continued dropped on the downside. We also drawn the support level, which was somewhere near 16,800 to 900, right? So if you see here, it has taken the support and it has bounced back. So this was on price action. We discussed these things. And on Elliott Wave perspective, we discussed a couple of charts. So these are our charts. So this is chart from 27th of August, which I published on TradingView. And here I mentioned how Nifty is not able to break 18,114 swing. So this swing break was not possible for Nifty because there are technical reasons as well, and there are fundamental reasons as well. So yeah, even economists will tell you that there is a recession and all, but we are looking from the perspective of technical traders, right? So here we mentioned that price has thrown below the channel, so it will throw above the channel, and then it will drop on the downside once it starts the dip, right? So this was the chart on 27th August. This is the chart from 24th of September. So here we mentioned Nifty has went up with three swings, A wave and then B wave here. So A, B and C. So it is not expected to break this X waves high. Okay. So this is X waves high was 18,115, right? It didn't break that. It made high of 18,096 and dropped from there, right? So this was the reason for us to be sure that this will not break this high based on Elliott Wave Theory. And here also there was ending diagonal pattern formed, and then like once it started, it gave the initial dip. We were having a clear picture that it will start the drop on the downside. So, and we were giving the minimum target of 17,166, which already hit in last Monday. And now again another chart we discussed on 17th of September. So this should go before this. So this was the first chart on 17th September. Then we discussed on 24th September. So on 17th September, we accurately identified the pattern that this is ending diagonal and the top has been made near 18,096. And we should start the dip on the downside. So that's what we said. Here there was a gap down opening. Then with the pullback, it filled the gap and then the drop, right? So this is what happened in next couple of sessions. So yeah, this was the chart. After that, it gave pullback and dropped, right? So in last week, that is 24th of September, we discussed this chart where we mentioned wave one completed here. So Elliott wave impulse structure has 5 waves. Whenever it is dropping in an impulse structure, it will drop in 5 swings. And whenever it's a corrective, it will drop in 3 swings. Okay. So here we are saying that it is impulse structure and dropping in the 5 swings with 1, 2, 3, 4, and 5. So concentrate on these blue numbers. So here second wave was completed, and since last Monday, third wave was started. So we also gave the minimum target for this third wave as 16,841. So Nifty opened somewhere near 17,160 or 100, and then gave small pullback towards 17,200, and then from there also it dropped almost 400 points to 500 points. So this is the chart that we discussed in our last week. So now we are going to check what is going to happen next. Okay, so this was the video that we published last week. You can watch that by visiting our channel, and this is the thumbnail for that video. How we predicted the exact top of Nifty, and is there is a bloodbath in the next week. So that's what we that's what the thumbnail was for the last week. So we got pretty good response, almost 500 views here, 50 likes. So keep adding those likes. That really motivates us. Keep adding the comments. There are 27 comments. So I appreciate all those added comments. So Carlton Kane briefly explained why he thinks he's also bearish. Then there were a lot of other comments. So even comments like this, like he follows our analysis very rigorously. That's what he mentions. And yeah, apart from that, some other people mention their views and how they are expecting a drop on the downside. That's what they mention. Even Suganti mentioned that she will watch all our videos. Hope she has watched that video and to learn more from our videos. So do keep sharing comments. Do add any of your doubts. That doesn't matter if even if it's a simple or foolish doubt. If you think, then also you can add all those doubts. We'll clear all them. I don't think there is any channel on YouTube who responds to each and every comment. We don't left any comments unanswered. So do make sure you get your doubts cleared. So if you ask questions, even if it's a silly question, you will be called fool for 5 minutes, but your doubts will be solved. But if you don't ask that question, you will remain fool for entire life. If you don't get clarified that doubt, if you don't ask those questions, you will be fooled for entire life. So you will not know the answers unless you search for it, right? So that's what I had to say here. Start the Elliott Wave. Let's start with the price action analysis first. In last week also we mentioned Nifty is supposed to drop towards 200 EMA somewhere near 16,800 to 900. Nifty made low ops somewhere, I believe. What is this low? Yeah, 16,747 low it has made, right? So it dropped towards the long-term moving average, that is 200 EMA. This is pink line. This pink line is 200 EMA. So that is somewhere near 16,884 right now. It gave closing above that. So the weekly closing, you could say, was last day's closing was very bullish. It engulfed the last candle. So the things could be bullish as per the price action perspective, but indicators are suggesting something else. Here you can see the very short term 13 EMA has crossed below 48 EMA. So this is a bearish signal for me. It will eventually cross below like 100 EMA and 200 EMA. That's what I think, because after this particular point, it went rallying upside, and now it has crossed again on the downside, right? It gave a bullish crossover here, and then now it's giving the bearish crossover. So EMAs are telling me that this could become a resistance, and from there we could drop. So somewhere near 13 EMA or 200 EMA, we should face the 13 EMA or 48 EMA, we should face the resistance. Obviously, the resistance near 17,200 is very much strong. So it didn't close above that. It almost touched 17,200, but then pulled back around 100 points on the downside in the last couple of minutes. So on 1 hour chart, you can also see there is a bearish engulfing candle, and there is a rejection from 17,200. So it is at least likely to go towards 17,000 on the pullback. Then it could again continue higher based on price action, but we'll check in more detail why we think that this is not going to happen. Okay, so a couple other signals here based on RSI. It has dropped below 50, so this is considered as a bearish market. And here there is a main signal of Aron indicator. So previously we mentioned that Aron indicator would turn to extreme negatives once it gives the crossover. So this has crossed over now. So there is a crossover, red crossed green on the upside, right? So now the market has turned bearish. So it's better not to think of looking for the reversal trades as of now. So mostly it will go below 30. RSI will go below 30. Before that, there won't be good relief. So this is the start of the trend. That's what I can say here. And RSI and Aron are showing us the bearish signal. So indicators are showing bearish signal. Though with the price action, you can assume that this is a bullish signal of bullish engulfing pattern, right? So it can go either way if you consider the price action. But with the indicators, we think that it's a bearish. Even the Elliott wave pattern can give you hint about the bearishness in the market. So let's start the Elliott Wave analysis. So now we said that there is a 17,200 is a major resistance, and somewhere near this level. What is this level? So the resistance level is quite higher after this. So somewhere near 17,400 we have that resistance. Okay, so we have to watch for 17,200 to 230 levels. If it has to go up, it should face this resistance here, and then again a dip should start. But we don't believe on the only price action. We can also check the Elliott Wave based analysis. So let's check the Elliott Wave chart. So with Elliott Wave, we discussed a lot of times in the last week that this is wave 1 and 2, third is in progress, then fourth will come, and then fifth will go on the downside. So there are 5 swings as per the Elliott Wave pattern. If this is the main trend or this is the impulse fall, then it will be going down in the 5 swings. So this is wave 1, 2, and this is the third wave. After that, fourth and fifth will occur. So why we are saying that this is the 5-wave swing? Because we think that the top has been made here. One more low below 15,183 is expected. We explained these things in our previous video, so you can watch our previous videos. That this is a ABC pullback on the upside, and this is a 5-wave sequence going on the downside as a wave C. So this is wave B. Somewhere here A wave completed. So this is A, B, and C correction on the downside. So we are expecting this is to be 5-wave swings. So as per the Elliott Wave theory, market moves in a upside in a 5 swings and goes in the downside in a 3 swings, or even there will be more swings if it's a complex correction. But to tell you an example, here is wave 1, 2, 3, 4, and 5. Okay, after that 3-wave swing came, and then again it went on the upside, but it won't go forever upside, right? Somewhere it has to correct on the downside. So the trend looks to have changed to the downside now, and we are thinking the market is going to correct in a 5 swings on the downside. So here we are saying that third wave could be, now there is the real trick starts. Okay, so identifying whether the third wave completed or not. So that is the main trick here. This tricked me entire week here, this range bound fall. So this 500 fall, we were not anticipating a correct pattern. So initially this looked like a flat correction, and then it appeared it was a triangle, right? So these things happen, but we don't have to worry much about them. We only have to know that third wave goes minimum 1.600 Fibonacci. There is a high probability that it will hit this level. If it goes beyond this by large margin, or it goes towards 200% extension. So Nifty gave sharp reversal from 16,747, right? So I'm assuming that either third wave is not completed, or it has ended near somewhere near 1.618, which is a normal extension for third wave. So if the third wave is not extended, the fifth wave will extend. Okay, so at least one wave extends. Either it will be fifth wave or third wave. Both third and fifth can extend as well, and that is also common. Okay, so the fifth is going to extend if it breaks this low of 16,747. So for idea for us is, once this is broken, we have a confirmation that the fifth is going to start. So that is the main thing I have to tell you here, right? So fifth is going to start, and then we'll have a more dip going on the downside. So if the third is not yet finished, usually the third waves are strongest wave, and it falls deeper. So it breaks 200 and 2.600 Fibonacci, or 261% of extension. So let's assume that we have made top here. Okay, at Friday's high, we have made a top. So in that case, and the third wave has, third and fourth both are finished. So what is our downside level in that case? Okay, so let's check that downside level. So what we are assuming here, if the fifth wave is going to extend and third wave has finished, then fifth wave will go towards minimum towards 16,434. Okay, so 16,434. If it's extension, really a fifth wave's extension, at least this much is coming. I don't think third wave is yet finished. So if it's finished, then still we have a move towards 16,000. That's what we can think. Once 16,747 is broken, we have 700 points to grab on the downside. So this is one way to think. Another way to think is the third wave is still in progress and it will extend lower. Meaning to say, this was the fourth wave here and third wave could have finished here, right? With this as an expanded flat correction. Hope you understand the expanded flat correction. We talked about this pattern many times. So this pattern is a tricky. So it tricks both buyers and sellers. So wave A, this is B, and this is C. C wave is a sharp pullback. So let me make it a micro. So this is the way we are assuming the expanded flat correction. Okay, so here the wave A is a three wave correction. Wave B is a three wave correction, A, B, and C. Okay. Okay, this is the B wave. Internally, B wave has three waves, A wave has three waves, and this C wave has five waves. So in case it opens flat or gap up and touches 17,200, faces rejection here, which is 0.32 Fibonacci, we have to wait for break of 17,060. So if it goes like this, breaks this, and then drops here, so this is our signal that the fall has started. We will drop on the downside. So this is one thing that you need to remember. So another thing is our analysis of entire fall will be invalid, or you could say this could form a different pattern and our wave count could be wrong once it breaks 17,429. So until this level is safe, we can still dip on the downside. So this is how we have to understand the market for next week. So if you are a conservative analyst or a trader, you have to wait for 16,747 break. If you are aggressive, if it opens small gap up, breaks a high of Friday, and then starts the dip breaking 17,060. So this is the aggressive trader's entry for the downside. Another case, if it opens gap down, let's say small gap down it opens, then what to do, right? So if it opens small gap down, then do make sure to watch for 0.600 Fibonacci. So what is the 0.600 Fibonacci number here? Okay, let's delete this. Okay. So 0.600 Fibonacci comes somewhere near 16,900. So if it opens gap down, small gap down, let's say, and breaks this 16,900 level, then there is another signal that the drop has already started. Okay, if it's open gap down, so then the dip should start on the downside. So usually what is happening in this entire correction is anytime it goes below previous waves 0.600 Fibonacci, it will drop more on the downside, taking out the low. So that's what is happening. So this is how we are thinking more bearish scenario of the Nifty, and why this expanded flat looks valid. There are a couple of confirmation points here. So this is not a rule, but some people use this as a guideline to consider the expanded flat. So here you can see the expanded flat usually does not go beyond 1.32 Fibonacci. Okay, so this B wave usually does not go beyond this line, beyond the 1.32 Fibonacci. So that is another confirmation, right? So 16,744.35, but here B wave made a low near 16,747. So there is a still margin of 3 point left, and this looks to be a valid expanded flat correction with 3 and 5 wave moves on the upside. It can even happen that our analysis is invalid. It can even open small gap up, and then continue going higher and higher and higher, then break this high, that 17,429 high will be broken. Then that is our signal that our entire count from the top of 18,096 is invalid. So this is the way we are projecting the market for the next week. So let's check now option chain. On the option chain, we see here 17,000 is where the price action has happened, and now it has become a little bit of support. So there was a good put open interest addition on most of the strike, 16,600, 700, even 16,800, 17,000, almost 100% rise in put open interest. So this signals a bullish move. Okay, so this is something that has already happened. On the call side, only these strikes have seen call short covering. Okay, whoever has shorted that call, they covered their positions only 30%, 40%, and 27%. Considering don't consider the figures because the number here are smaller and number here are bigger. Okay, so in proportion, 43% is almost 50% exited from 16,900. So this signals a bullish bias, at least from the perspective of Friday session. So let's check the more detailed approach where we find out the support and resistance. So here the major support currently is at 16,700 with the highest number of put open interest. So this is the major support. So break up this will take us towards next support 16,500. Okay. So on the downside, what I'm seeing on the downside, so 16,700 if it breaks from the top again. Right now Nifty is at 17,100, right? So if it breaks again below 16,700, then the dip will continue towards next support, that is 16,500. Okay, and on the flip side, the resistance currently is at 17,200. Okay, so this is the second major resistance. The biggest resistance is at 17,500 with 45 lakh call open interest. Okay, so this is the call open interest in lakh, which is 45 lakh. So this is the biggest number. So Nifty for this expiry has a range of 17,500 on the upside and 16,700 on the downside. So this is the range. Okay, the second range, second most call open interest, put open interest is at 16,800 and 17,200. So this is the second range. Okay, 17,200 to 16,800. So within this range, Nifty is going to trade for this expiry. Any major break of these levels, like on daily, let's say by 3:20, we have broken below 16,700, then the next day 16,500 will come. So that's how we can use the option chain. So and on the flip side, if Nifty closes above 17,200, then the next it will hit towards 17,500. So this is how the option chain can tell us the trend. But from the Friday session, it gave a bullish move and the good put open interest added. So let's see what happens in the next session. Do let me know in the comments what do you think, and do hit like button, subscribe to the channel. Thanks for watching. Bye bye.